Do you want to learn how to save money on your taxes? Well, here's how to do that. First off, just understand that this is not meant for financial advice. I'm not a financial advisor. I'm not a tax professional, but what I am is an avid learner who wants to understand how to use my money in the best way possible to save money on taxes. This is something that the government has set up different ways for all of us to save money on taxes. And in this video, I'm going to help you understand different ways that may be available to you and how you can use them to save you money. First thing is tweaking your W-4. This is the form that you submitted with your employer when you got started with them. And maybe you found after last year that you actually had to pay the government tax money. Well, then you may want to adjust your W-4 form with your employer to make sure that they are taking out a little bit more money instead of allowing you to keep more of that money. And that way at the end of the year, you're not having to pay money in taxes. Now, you could also find yourself on the opposite end and they could be paying you a lot of money, and maybe you don't want the government to keep hold of your money all year. I know I don't. So it's something you want to tweak this every so often, especially as you have life events that change. Last year, went to go file our taxes thinking that we're going to receive this big return on our taxes, but it did not happen that way, and her work had actually messed up her taxes a little bit, and so we actually had to end up paying out a lot of money in order to pay for her taxes. So this is something you don't want to have happen. Just make sure to tweak those W-4s every so often. Option number 2 for saving money on your taxes is putting money in a 401k. Now, I'm not going to talk about whether or not you should put money in a 401k or not. That's up to you. But if you want to put money into a 401k, it is a tax deferred account where a lot of employers actually have a dollar for dollar match up to a certain percent of your annual income. So for instance, some employers may have 3%. And so if you put 3% of your annual income into that, they're also going to put 3% in that. So now you've gotten 6% of your annual income, and that money is then able to grow for you tax deferred. So how a tax deferred account works is that you are going to pay the taxes when that money or savings has been withdrawn. So that's going to happen later on. So that's how a 401k works. And there are benefits with a 401k. So if you choose to utilize it, that could help offset your tax. Option number 3 is saving for college. Maybe you have some little ones in your house and you're wanting to prepare for their college, and you know that your pocketbook does not have enough money to pay for all of their college expenses right off the bat. So if this is something that you're wanting to save up for, putting it in a 529 savings account is an account with your state. It is something that potentially could help with your state taxes later on. It's something that you'd want to look into for your particular state, as there are a number of different states and a number of different rules on how this works. But it could be a good option for you, especially if you want an account that is money set aside specific for a college expense in the future. Option number 4 is a health savings account, or an HSA. These are for a high deductible medical plan. Now, the way that these plans work is a lot of employers will actually contribute to your HSA account, which is kind of like a checking account where you're able to put money into this account and you're utilizing the money for specific eligible medical expenses throughout the year. This money can roll over from year to year. If you are single, you're able to put up to $3,600 into this account per year. And if you're married, you're able to put up $7,300 per year into this account. So it's a great way to be able to not be taxed on that money when you're putting the money in, and you are not taxed on that money when you use it to pay for eligible medical expenses. Now, I don't know about you, but there's a lot of eligible medical expenses that me and my family have. Just being healthy human beings, you know, it just happens that we have medical expenses throughout the year, and this could be a good option for you and being able to save money. So you'd want to look into the specifics of it and see if it makes sense for you, or if a different kind of medical plan would be better suited for you. And number 5 is the earned income tax credit. This is where if you made less than $57,000, you may be eligible for a tax credit of up to $7,000. So you'll want to look into your particular situation with your tax accountant or TurboTax or whatever you're using for filing your taxes. But this is another option for you to potentially be able to save on the tax that you're filing. Number 6 is charitable contributions, and this isn't just necessarily cash. This is something where maybe if you're giving away older things that you're not using anymore to somewhere like Goodwill, you may be able to then utilize that as a deduction from your taxes. You just want to make sure that you have received a receipt and that you've kept track of what things you were donating so that you're actually able to utilize that when you go to file for your taxes. But that could be a good option. Number 7 is medical bills. Now, if you had a lot of medical bills, this may be a good option for you, as you may be able to help offset your taxes by looking closer at the amount of medical bills that you've had. In general, you're able to offset medical expenses that are more than 7.5% of your adjusted gross income. So for example, if your adjusted gross income is $40,000, anything over $3,000 in medical expenses is going to be something that could be deductible. So in this example, if you had $10,000 in medical expenses, then $7,000 of that could be deductible. You would want to look into your particular situation, but make sure that you're keeping track of your expenses, especially medical expenses, throughout the year, so that you're able to utilize these when it comes time for tax time. Number 8 is tax loss harvesting. What this is where you have something like a stock that has not been performing well. Let's say it dropped in value. Let's say it was a stock that was worth $100 when you bought it, and it's dropped down to $50. Well, that's 2022 for you. But you're able to use something called tax loss harvesting, where if you were to sell this stock because you said, I don't believe in this company anymore, it's not coming back. So you sell that stock, but you actually have a different stock that you made $300 on that stock. Well, you're originally going to have to pay money on that $300 that you made from that stock that did well. Correct? Correct. So if you do this tax loss harvesting, then now the amount of money that you lost over here is something that's going to help you in offsetting the amount of money that you have to pay on that $300 that you made on your other stock. In general, what it all means is if you had a stock that did well and a stock that didn't do well, and you sell the stock that didn't do well, it'll help so that you get to keep more of that profit that you made in the stock that did well. Now, you want to make sure that you are doing these things before the end of the year, because there's a big difference between doing something on December 31st and doing some of these different strategies on January 1st. Go ahead and put down in the comments below different ways that you would suggest on saving money on your taxes. Tell me what kind of different ways that you've used in the past and what your tax accountant has suggested. Now, if you enjoyed this content, go ahead and hit that subscribe button so that you don't miss any future videos, and I look forward to seeing you on the next one.